Hey, what's up, guys? Welcome back to another awesome YouTube video with me, Tramayne, your Forex Chasers mentor. And in today's one, guys, I'm going to be showing you guys something that is so helpful, literally game-changing. Now, obviously, as you guys can see, as the title suggests, we're going to be discussing a little bit about the nature of the structures that develop on our chart, and as well as how do we get good timing when it comes to actually executing on our trades. How do we actually get the good timing that gives us good trading opportunities? Now, guys, before we even get started, definitely do drop a like and obviously drop a comment. Let us know what other kind of videos you'd like to see on the channel. Otherwise, let's get started. Make sure you also share this video if you do find some value in it. So guys, getting started, what we're going to talk about is a nice process, obviously involving timing. Like, how do we time the market and actually get good entries? Now, guys, we need to think about our whole process obviously as a whole. Now, we know that we obviously do our analysis process, and our analysis process involves us finding different things. First of all, we need to know which direction are we looking to go. Once we know which direction we're looking to go, we then need to know where to trade, or where will we be looking for those trading opportunities in this direction. Once we know which direction and where, we need to know when to execute our trade. So basically when to enter. So all three things we need to know, guys: a directional bias, where we're going to find a trade in that direction, and then we need to know when to execute. Now, simply enough, guys, involving timing, guys, I've given up trying to time the markets. I've given up trying to time the markets a long time ago. So I do understand that there is no perfect time that does exist within the markets, but there is a time where all of your entry criteria aligns and gives you and guarantees and makes sure that the environment that is currently in play, the environment that the market is currently in, the characteristics of the market that are playing out right now are characteristics, and the market is in an environment that your strategy does perform well in. So going into our basically our entry criteria and how we basically time the market. So this is kind of like a tip for you guys. Always use multi-time frame analysis, because your entries are the last part of a three-part process where you find a directional bias, where you find where to trade, and where you find when to enter into the market. So getting into things, guys, we're going to go through that process here on US30. I will just show you guys a young trade that we did capitalize on yesterday. So just for some reference, we will be using our top-down analysis process on this pair so that we can figure out our three pieces of information. Now let's start. So looking at the 4-hour, guys, what we can conclude about the 4-hour, especially higher time frame analysis, is that we've got some sort of a descending structure. So we see this market being in some sort of a descending structure. There's our resistance trend line there. There's our support trend line over there. So we can conclude that we're in a descending structure. Already we do understand that descending structures normally break to the upside. So with that piece of information, we're going to come to the most recent piece of price action to see what we have here. Most recent piece of price action, guys, what we see is market coming down, giving us some extreme lows, pushing up, giving us some extreme highs. Ever since we've created these extreme lows and these extreme highs, we've been seeing market moving pretty much sideways, being relatively stuck inside of these extreme highs and extreme lows. Now that we've concluded that we are stuck within a range, we already know that as long as it doesn't really matter what time frame, doesn't really matter when it happens, any time frame we find out, anytime we find ourselves stuck within a range, we look for those buying probabilities from the low of the range and for those selling probabilities for the high of this range. Now that we are towards the low of the range, we already have our directional bias. So already we are going down onto our lower time frames with it in mind that we are looking for bullish bias trading opportunities. Now remember, we are talking about how to get a good, well-timed entry. So we've got a directional bias. Now we're dropping down onto a time frame lower than the 4-hour, since the 4-hour is functioning for our directional bias. And now we want to find out, where do I get these trading opportunities? Yes, I want to buy, but where will I find those opportunities to buy? Now, all we're going to do is just look at the most recent price action. Looking at the most recent price action, what we've got here is a set of lows. We've got a set of highs. So clear enough, we can see that this market is in a downtrend, giving us these lows, lower highs, lower lows, lower highs. But if we look at our support structures over here, clearly we can see prices are being corrective around our support areas because we've broken below, closed below, broken back above, closed back above these support structures over there. So giving us an indication of corrective price action. Because price action is corrective in the most recent piece of price action, what we're going to do is isolate a corrective structure because price action is showing us corrective nature. Now, since we are looking for bullish bias trading opportunities, what kind of setups should we be isolating? Bullish biased setups. So guys, simple enough, all we're going to do is from our 1 hour, we're going to be looking at those points of interest, identifying areas as to where can we find those buying opportunities. And nice and simple enough, if we just look at the structure over here, we've got a nice, beautiful corrective structure. Or let's just include these lows over there, and we'll include and do that. We've got a nice, beautiful corrective structure, giving us our first touch, giving us our second touch, and clearly enough, we can see that prices are at the point of interest where we should be looking for buy opportunities at this third touch. Now that we found a directional bias to say that we want to buy, and we've got a point of interest to say where are we buying, now we need to know when to jump into this trade. Now we're dropping down onto our 15-minute, and simple enough, guys, we're looking for some sort of a structure. Now, if we look back in the past, we'll obviously be able to see that there is a nice, beautiful point of interest over here. So an area, obviously, that we're not expecting prices to want to violate and break below. So we do know that if we enter any bullish bias trading opportunities in this area, our stop losses will be below these lower structures over here. Now that we have a point of interest, all we're doing is coming to our most recent price action. Now, what we're doing at our most recent price action is we're looking for two things at our point of interest. We first of all want to see price action rejecting an area where we expect to see buyers coming in. So what are we expecting to see? We want to see some wicks to the downside, giving us an indication of rejection. Once we see those wicks, what do we need to see next? We need to see momentum shift away from this area where we are looking to buy before we jump into the trade. How do we identify momentum shift? We look at our candlestick structures, and once we find a candlestick that has closed higher than a previous candlestick that has a higher high, higher close, then we understand that that signifies momentum shift in our direction. Obviously, in this case, we're looking for those bullish engulfing candlesticks. Now, what we're going to do is we're going to play the market forward, looking for, number one, our rejections from our level of structure, which we clearly see we've got a nice 15-minute pin bar over there, which gives us a beautiful rejection from an area where we are looking to trade. Now, what else are we looking for to be able to say, now is the right time for me to enter? Last piece that I'm looking for is for my momentum shift away from my level of structure. Awesome. That signifies our momentum shift. So we've got rejections, we've got momentum shift away from our level of structure. Guys, once we have our entry criteria presenting itself, that is when we pull the trigger. And one rule of thumb, guys, you guys know that we are trading based off probabilities and statistics. So we don't really care, or we don't even worry whether or not this single trade works, because we're not entering this trade because we assume it's going to work. We're entering this trade because all of the entry criteria that we use to trigger ourselves or to pull ourselves into the market have presented themselves. And once that criteria presents themselves, nothing else that we can do aside from pull the trigger. We don't know whether a trade is going to be a winner or a loser. So for us to consistently be profitable, we need to execute consistently every single time we see an environment or we see criteria that allows us to jump into a trade. Now, looking at things, we've got our nice point of interest. If you guys recap what we've done is we figured out which direction we want to go. Number two, we've figured out where can we find trading opportunities to trade in that direction. Number three, we've looked for an entry trigger, which is us finding rejections from the area where we want to trade, followed by momentum shift away from that area in the direction we're looking to trade. And those two criteria trigger us into the trade. Now that we're in the trade, guys, all we're doing is just looking to target the 90% rule of the structure. So obviously we want that good risk to reward ratio. So we maximize on our rewards, and obviously we limit our risks. We see that we've got a nice 6% trade over there, 6.76. All we do from this point onwards is we play the market onwards and we trail our stop losses. So all we're waiting for is once we see a high, once we see a low, we trail our stop loss, according to there, already you guys can see we've secured some nice, beautiful profits over there. All we do is we wait for structure to give us more price action. Once we see obviously a high being formed and a low, we trail our stop loss below the previous level of structure. We wait for more price action to develop. Once we identify a swing low, once prices close above the swing high, we trail our stop losses already below our swing lows. Guys, we have secured some beautiful profits. I guess more than 1:3 in this case. We obviously just wait for the price to continue. So we trail stop losses obviously according to the structure. We just wait for price action to give us a low. Once we see prices breaking above the previous lower high that prices have just created, there we go. We've broken above and we've also closed TP, but otherwise we'd have trailed our stop loss here since we've broken and closed above these highs. And otherwise we've hit our TP straight to the 90% rule of the structure. And look at our timing. We've got beautiful timing because we involved 3 pieces of information. Which direction do we want to go? Where do we want to find that trade? And what criteria will trigger us into that buying opportunity at the area where we are looking to trade. Once we have these 3 pieces of information, guys, the market, the stars have aligned in your favor, and that is the time you should be triggering yourself into the trade. Whether or not you will find a winner or a loser, guys, remember that the outcome of every trade is completely random. The way the statistics will distribute themselves over a sample size is completely random, but how we function is we know our win rate of our strategy, and obviously we expect to win maybe 60% out of every 100 trades that we take, or out of every 25 trades that we take, or out of every X amount of trades. But we do know that we don't function on a trade by trade basis because that hurts our psychology, but we look at things from a long-term perspective and we make decisions based off what our outcome will be over a large sample size. Guys, hopefully you have enjoyed today's YouTube video. You have received the value that was intended for you guys. I just wanted to share with you guys how you guys can kind of refine your entries, get better timing, and obviously execute when you need to execute. If you guys have enjoyed the video, definitely will remind you guys again, do drop a like. Let us know that we are spreading some valuable content. Otherwise, guys, catch us in the next YouTube video. This is Tramayne, your FX Chasers mentor. Don't forget to subscribe before you leave the video. Have a great week, guys. Cheers.